I'll do a quick intro myself first. I'm Elbruz with Outrun. We provide strategic advisory to payment neobanks and banks about go-to-market, how to work with stablecoins, etc. We also have a venture studio where we invest in startups, become a co-founder essentially for them when it comes to go-to-market and raising funds. So that's me. I'll go on my left with Oliver first. Please.
Hello. Does it work? Yeah. So Oliver, VALUEX, founder of VALUEX. We are also a venture studio. We developed our own rating scheme in order to identify promising projects. And we are aiming for building together with those that seem promising. And I think we will talk about this issue about de-risking later on.
Yes, absolutely. Astrid?
Hi, I'm Astrid, general partner at SMAPE Capital. We are an venture capital investor investing into pre-seed, seed stage, and Web3 ventures only.
My name is Anton Werner. I'm a co-founder of Fountainhead Digital, and we invest in liquid crypto tokens only through a product that is listed on the stock exchange in Germany, and it's a blend of fundamental selection for assets and quantitative strategies to reduce volatility for investors.
Hi, my name is Maximilian. I'm from Elevator Ventures. We're the venture capital arm of Raiffeisen Bank International. We're investing in fintechs and beyond banking since 2019. We are in our second fund, first multi-LP CVC in Austria. And of course, crypto and crypto-related investments have been on our radar, and we've done a few recently.
Excellent. Thank you all. So I think to level set, what we have seen in the recent months is that VC activity is increasing. It's almost like 2021 again. I think last quarter, total capital deployed was 2 billion in crypto and stablecoin startups. We have seen stablecoin volume go to 30 trillion levels, which is competing with Visa and MasterCard. So things are changing again, and there's a new hype cycle coming up on us. So I just wanted to ask the panel, what are some investment themes that are exciting you're seeing when it comes to investment opportunities? Are you seeing more L2 activity where people are talking about L2s are the next chapter of investment thesis? RWAs, real world assets, are also quite hyped up. So I just wanted to ask you guys, what do you see in terms of deal flow and where the money is flowing these days?
Well, in general, sort of in terms of what we see a lot in the deal flow, but we don't really invest in stablecoins. We see massive amounts of companies that are trying to build the millionth stablecoin. But the sectors that are more exciting to us have been privacy, because we think that privacy is also a very important topic for the future. So we've done already 4 investments earlier this year. Then we think machine economy is something that is really interesting, also in the intersection of AI and decentralized science. Though if I say decentralized science, I don't mean decentralized crowdfunding, but really sort of healthcare applications and the AI Asian economy behind it.
All right. Anybody wants to add?
Yeah, I think crypto is always about also kind of like chasing the next narrative, and there is a lot of obviously dynamic in the space also when it comes to the speed of innovation. What we feel right now is that it's the old topics that should catch on the most from this institutional adoption, meaning stable coins and RWAs. They will bring a lot of money, users, capital onto the blockchains. And to stay in the analogy, you can either invest into gold mines or into the shovels. So if you go into the base infrastructure that will support those developments, this is, I think, right now one of the best opportunities to seize returns. And also DeFi that has established itself through reliance over almost half a decade now, to a place where Lindy effect has come to a point where also traditional players will engage with this kind of protocols, and there are structural unlocks on the horizon from a regulatory perspective, and also from a capital flow that all of that money that comes onto the blockchains will be in search of yield. That we believe DeFi is also one of the bigger opportunities going ahead, even though it's been around for, or especially because it has been around for a longer period of time.
Yeah. Anton, maybe just on that before we pass to Maximilian, do you think stablecoins and DeFi are hand in hand in this journey? Are they growing together in terms of attention?
Ultimately, yes, because it's not only stablecoins, but it will also be RWA, so the tokenization of different assets. In essence, this means that there will be composability of different asset classes which have not been composable to this point. And this will mean that we can on-chain create new investment products. All of this capital, however, has one thing in common, and that is it's in search for yield. And DeFi can provide this yield. So I believe from those two megatrends, DeFi will see a lot of capital inflow, which will boost essentially the P&L of those business models behind the protocols. And that's a good investment case for investors.
I would just add to the metaphor that you used with the picks and shovels. I mean, if there's a gold rush, you can pick and choose to invest in some of the gold mines. And if you're lucky, one of the gold mines does actually find gold. Or you do invest in the shovels and picks. And this is what we've been doing. And one can see that due to the whole topic maturing, and more institutional investors jumping on it, a lot of retail investors jumping on crypto, there is a need of more infrastructure and the clarity around the whole topic. And with two examples maybe that we've recently invested in, an Austrian company called Bluechip. I think Florian, the founder and CEO, is here. I've seen him around. Who are actually just supporting and calculating taxes that you have to pay when you're trading crypto. And the second one being Tangany, a BaFin licensed custodian supporting financial institutions in actually offering custodian services, which are shovels in my opinion, is two topics where we see huge growth potential. No matter now being a bit I would say provocative, no matter which of the gold mines, which of the coins is now picking up speed, these things will be needed. And this has been a very good investment thesis for us to start endeavoring into the topic.
So the enablers around the ecosystem, so Bluechip, for example, tax is sometimes a boring topic, but the need is there, right? So I think the enablers providing services to people or the institutions in the ecosystem. Yeah.
And governments are waking up that there's a lot of untapped income.
Of course. Oliver?
I think nearly everything has been mentioned so far, but maybe one point, because you asked what is the personal or the focus. DePIN has been a hype or a new narrative like last year, I would say, and that really died down. But we are really quite bullish on the business models and the use cases, if they make sense. Some of them just, were overhyped, I think, and just turned out to be actually not working because there's no adoption. But there are others that really will bring a future potential, but some of them really take years or maybe 10 years. But I think that's a potential that should not be overseen. Just to complement maybe your comments.
Yeah, fully agree. I think it's just an indication of how the industry is growing and maturing that none of us mentioned NFT marketplace or NFTs. So that's actually a big win, in my opinion, as things are progressing towards better. So maybe let's switch gears about, as an investor or as a VC, how do you de-risk your investments in this new environment? Because things are changing, there's more money coming in, you probably need different tools, different approaches. So when it comes to identifying risk and managing it, and different stages of the startup lifecycle, when you invest in an early stage or a later stage company or a token project, how do you de-risk your investment? What are your practices? What are your approaches? What do you look into? And anybody can start in the panel. Yeah.
So first of all, for us, it has been quite important in the fund that we keep principled and kind of ticket sizes that we have, so to really spread evenly across sort of the whole portfolio. Then also between topics, there has been sort of quite some themes that we have invested in, mostly under the banner of infrastructure, but that was also quite important. The other part was in the due diligence process that we are very fortunate that we have 8 technical advisors on board. who really are not just pretty faces on the website, but really come on every single technical call. They will be prepared to go through the whole architecture. They will have gone through GitHub and all that, and they will ask very tough questions sometimes. And also, we're very fortunate that part of our investors are so well-known validators in the space, called the iCapital. And they also help to sort of look at the token economy from different stakeholders. Because again, sort of we know that transaction fees and governance are normally not enough to really drive value through usage. So you need to really think about how you can incentivize actually all the stakeholders in the system. So for us, it's been very important to really look at this aspect. We also work very closely with our teams, meaning that sometimes we have had like weekly or bi-weekly calls with some companies to really get them through a very critical stage for, I don't know, pre-listing or pre-market entry or so processes is very important. So we have a very open door policy. It's very important because only if the portfolio is successful, we will be successful. So that has been very important to us, and also to sort of make them aware to raise another round early on, so that they really go through this very critical time that we have now, for example, for the next 12 to 18 months, that they don't run dry through this time, because I think there's still some tough times ahead, even though we have already a running joke in our sort of lines that sort of the bull market is only just 6 months away, right? So take any time plus 6 months. So the next one was said again to be somewhere mid Q2 or so. But I think that it makes sense to really also sort of look at the runway there.
Yeah. And Anton, you have a slightly different approach when it comes to your, let's say, portfolio and how you deploy it. But
yes, I mean, the main difference between the two of us or our investment approaches is that we only invest when the token is already liquid, right? Mm-hmm. And this liquidity is a curse and a blessing, essentially. What I mean by this is a blessing in the sense that you can steer risk management in a different way than if it is not liquid, right? Because if it's not liquid, you're locked into the position anyways. There's no leeway as to react to certain things. We can react at any given point, just like any other investor can react at any given point when the token is liquid. But the curse here is when to react and when not to react, because just because you have the opportunity, it's not always the best to react, right? So it boils down to, I think, two things. Number one is, you need to have a thesis. Why do you invest in something? And in order to understand if things go south and you want to exit, is my thesis broken? And for this, you need to fundamentally monitor the asset you have invested in. This is number one. This is essentially why we also say crypto is liquid venture capital, right? Because you need to understand the business model, you need to understand the drivers, you need to monitor the drivers, and if you feel that it's broken, it's a problem. But the second thing is that crypto actually provides a lot of data that is not there in traditional markets. Essentially, what we can say is that those business models run on blockchains, and since those business models run on blockchains, we have data for almost every part of the process within their business models. That's called on-chain data. And we also have, since the tokens live on the blockchain, information as to investors, how much profit they are, how much in loss they are, who is buying, who is selling, is it the smaller ones, is it the larger ones, etc. And out of all those data, we have built quantitative strategies that basically detect market momentum changes, and that help us de-risk our portfolio. So I think the big challenge for investors in the liquid space is there is this heightened volatility. Volatility creates emotions, and you don't want to have emotions in your investment decisions. With this, we basically break it down to the data, and the data tells us the story. And then it's based on the data, whether we go into cash or if we stay partly or fully invested. Right now, for instance, we are fully in cash.
Interesting. Oliver?
I mean, on our side as a venture studio, it's of course always a very individual and personal thing. So our data is actually when we start working together with the projects. Mostly we start by working on the investment story. And by doing this, and after doing our rating, which is like a mini due diligence with 17 distinct criteria, and that goes from market dynamics and opportunity to business model and also community and engagement of the community. Actually, you then see where there are the weak parts, and then actually we can decide if that is a project, because as you told also before, it's same with us, how we do it, that's not scalable. Yeah? We can do a few projects per year, but not more. And after this process, that is normally a few weeks when we really work on the investment story, we really quite detailed, in a detailed way, know if that's a project that we can believe in, and so that's our decision gate actually.
Got you. All right. Maximilian.
On the question of how to de-risk crypto, probably the first thought is, what are the risks that are particular to crypto? Because of course there are risks involved that are involved with any startup investment. Of course you need to look at the team, you need to look at the technology, at the market, at the assumptions behind the hockey stick, and so on and so forth. Okay, shifting that aside, what makes crypto particular? Crypto makes several things make it particular. First, there is a certain point of regulatory and clarity still out there. Secondly, the infrastructure and the global infrastructure is still shaping up. So it's not clear what will win, which standards, which infrastructure. And thirdly, and Anton, you mentioned this, it's this probably higher volatility than what you have in other asset classes. And those three things we look closely at in the companies that we should invest in this space. First, the regulatory part. Are the founders focusing fully on compliance and regulation and the developments and the future developments in regulation from day one when they start their startup? If this is not the case, red flag. Mm-hmm. Secondly, infrastructure. Are they aware of the trends of interdependentness in different infrastructures that are basically the rails of crypto currently, or not? Mm-hmm. And where are these dependencies? And thirdly, the volatility. I think we are all aware that there are crypto winters, that there are certain seasonalities, that there are bulls and bears markets that can happen anytime, and that are triggered by certain events that have nothing to do with the particular startup. So what to do about it? Stay flexible, right? Mm-hmm. If a company is very, very CapEx heavy, is very inflexible in their cost structures, is maybe burning too much in comparison to their growth, and is actually probably running into the next bear market or crypto winter, then it will probably, those will be the ones that when tide is over will be appear naked, right? Yeah. But who will still swim will be the ones who are flexible in their cost structure, who can be flexible in the infrastructure, and who are flexible enough to implement new regulations. So those are 3 points for us that are very important to de-risk this particular asset class.
Very interesting, because you touched upon a few points. Oliver, you go first, and I'll just expand this question.
Yeah, I just wanted to support this. The question is always, is this project able to create adoption, or is it just a community game? Yeah? Mm-hmm. And we've seen quite a lot of projects that at the point where we were to now really start building traction, creating adoption, they found out that that's the hard and tedious way, and they turned away. Because it's so much easier to tell the story to the community that something great is coming, and it will come sometimes in the future, but this game is not endless. So, and I think that's the point, that's one of the really critical things. So really building the substance. I would say that for us, that's really the most critical part.
Yeah, something utilitarian and delivers value.
Yeah, no, I mean, it's in the 12 years I've been in crypto, volatility doesn't shock me anymore, so I've got a thick skin to that. But I totally sort of resonate with what Oliver said here, that it's really important for companies also to sort of really focus, build something that people really want to use, right? Because it's also been sort of an unfortunate thing that also sort of the token performance is very tightly linked to reputation of the project. And some projects just, again, coming back to sort of the whole runway discussion, just launch tokens prematurely because they think that with community, you know, and hyping up, they will get like boom, you know, but I think these times are over. Yeah. So it's really about sort of revenue generating companies, really proving that they build something that they need. And only if they really need a token, and if that token design really makes sense, then they should launch a token, because the reputation can be over in no time. We, for example, have invested 3.5 years ago in the very first round of Li-Fi, very well-known sort of aggregator tool. It's also built up Jumper Exchange and all that. There were early talks about token several times, but I'm actually quite happy that they decided to shelve that sort of idea and really said, no, we focus completely on the equity, we focus completely on the product. Let's not just sort of tear down everything with some speculative asset that doesn't help anyone.
Fully agree. Anton?
Maybe just...
I think we hit a nerve here. Now we are talking more about this. Let's see where this goes. Yeah.
It's just one thing that you mentioned around the token. And there's a saying out there, I'm not sure who said it. Every token needs a business model, but not every business model needs a token. Mm-hmm. And that holds very true, I believe. And if you come to think about it, launching a startup and scaling a startup is really damn difficult. But what this entails is also getting external money on board, and getting investors on board is also a difficult thing in the traditional VC world. With money comes expectations, and this makes it even harder. So I was a VC myself, and I always told my founders, you know, if you take external capital, it's not going to get harder. You need to run faster, so this increases your risk. Now in crypto, if you have a token, you're dealing with investors on a second per second basis. And this makes it even more complicated. So really only use a token when your business model requires a token, because else you're just adding up complexity that will not pay off to you.
Yeah. Yes, and never think that your risk-taking is just printing money. But that's what happens. Yeah. And then you're in this situation that you just described. Yeah.
Well, let's switch gears here, because Maximilian talked about regulations, compliance, helping you de-risk the investment to a certain extent. I mean, a few years ago, and crypto goes in cycles, we know this, in 4 years, whatever cycles, and now those cycles are microcycles, because you have a US president that tweets about, I love Bitcoin and Ethereum, things can change. And then you have the confusion around MiCA, PSD2, what's happening with stablecoins. I think we have regulations, which is helpful, there's more clarity. But in my opinion, we haven't really de-risked regulatory risk component that much. Navigating it still requires a lot of capital, talent, adherence to laws and rules and regs, but I think we're not there yet. So maybe to a certain extent, it has become a little bit more complex to mitigate that risk, because you have to factor in those compliance components earlier on in the process, versus 4 years ago, you were running around getting a VAST registration and then you can go live with your product right away. So what do you think about that? Are regulations better now when it comes to helping you de-risk your investments? Can you say that, oh, you have a MiCA license, you're less risky versus somebody else who doesn't? And this can be a token, by the way, as well.
I think difficult one. So first of all, I think that, you know, we have regulation and we have kickstarted. MiCA is something positive in general. And I also think the past has shown that in general regulation can help, right? But I think there are some deficiencies that sort of make building up sort of new business models and new startups really difficult. So for example, we have a machine economy startup that is based in Europe, and they gladly run by Bitcoin OG, so they don't have funding problems. But if it wasn't for that, you know, then they would have probably given up by now. And this is even though the technology is really super great, extreme well hardware expertise, right? Everything's set up, so they're now slowly integrating, but they're saying the regulatory overhead is really, really huge. And then you have other sort of regulations that kick into business models too. For example, if you think about decentralized healthcare, right? Then you have also the medical device directive, which says crazily, okay, if you just change your software a little bit, then boom, you have to recertify it. Now added to blockchain that is so agile and has, you know, something to say. But so I think there is something where while I welcome regulation, I think it's not done a good job yet to speak to some technology leaders of certain sort of areas to make it easier to also build up these models, because in the end it will benefit all of us, but we need to make them possible.
Yeah.
Maybe on the regulation, whether it's a good thing or not, it depends on what you think crypto can be in the future. Shall crypto be an asset class like wine and old-timer cars, right? That only very few can actually do investments in, and only more little or less do understand? Or should it be an asset class that the average Joe can actually do investments in, and everyone should actually be exposed to and invest in to be able to increase their wealth? And if it's the later, then I think there's no way around a certain maturity in regulation, and I don't think that this regulation will necessarily hinder companies, startups, new coins, new tokens to thrive, because in the future, I would say specialized compliance providers. We've just heard Matthias from Chainalysis or others can do the job, or maybe even traditional finance, like banks providing custodianship, banks providing infrastructural services, will be enabling and actually taking off the shoulders of new startups or innovation certain parts of this regulatory burden, and on the other hand, giving them the trust, transparency, and maturity that is needed to be able to serve what ETFs are doing, and not what the fine wine or the old-timer cars are doing.
Yeah. Anton, do you want to go next? Yeah.
Yes, I just want to add one point. I fully agree on regulation. I think regulation is needed for crypto to basically mature, without a doubt. One thing that you said, I would probably take the other side on, and you said for the average Joe to invest in crypto. I think this is a big misconception here. Essentially, cryptos are startups, right? Investing in tokens is investing in tech startups. And just because it's easy, because potentially everyone with a wallet can do it, it's not the case that everyone should do it. Because the very least people out of 100 would feel comfortable making a decision in investing in early stage tech companies at the forefront of innovation. Now, for some reason, buying a token is a completely different thing, and almost everybody thinks he's capable or she's capable of doing that. So I don't think this is a product or an asset class for the average Joe. It started out with retail, and it's now more and more institutionalized. If we look at other asset classes, it's the exact other way around. It's always been institution first and then retail. And crypto will always be early stage. Sure, Bitcoin will become bigger, Ethereum will become bigger, maybe not. But there will always be new projects with new tokens being at the forefront of innovation and being early stage startups. And that's not for everyone.
Yeah. Sorry, I need to, I would like to say something about that, because for me, the one aspect is, yes, that you can invest in these tokens, but actually, what these tokens should be doing is allowing you to sort of participate in an economic system and also derive value from that, right? So yes, it is used by angel investors, venture investors, sort of to get early access to these economic systems, and then hopefully, get a return on that. But I think actually the whole development around DATs and all that, ETFs, is actually a very sad development, because it has degraded, the whole asset class into something that is a purely investment thing. I don't see it as a tech stock at all. So I think that gladly also think the community is going more and more now again to its cypherpunk roots, right? And trying to see like, okay, how can we make crypto and the Web3 vision a better place? And not just being an investable asset, but being actually something that will be used by everyone at some point in time, right?
I just wanted to add to regulation because, yeah, of course we need that, yeah, but we also need to take the global perspective. And we are really super strong in Europe in making it the hardest area for our companies and startups. And I think this is what we need to change. Regulatory is good, but we have to take this global perspective. And I think then we will see that we need to give them the same chance as an opportunity as they have in the US, in the Middle East, in Asia, yeah? And yeah, so that would be my point on regulation. Yeah?
Yeah. No, thank you for this, but I have to say a few things and we'll switch gears to liquidity and tokenomics a little bit. I think crypto is the victim of its own success, because just 5 years ago, when you look at Larry Fink, BlackRock CEO, or Jamie from JP Morgan Chase, they were saying Bitcoin is a scam, do not enter this asset class, etc. And all of a sudden we have these people investing, building ETFs, expanding the asset class volume by 10x, 100x. And here we are saying that they have taken the mojo out of it because it has become grown up, suited up, and you have bankers talking about perpetual trading in a Coinbase conference in London about the meme tokens trading is bullshit, etc. So I think it's a natural life cycle of any new technology. The way it enters the market and the retail versus institution is quite different. I agree with Anton's point that it kind of went the other way around, but also the point was it was supposed to be decentralized, that I could do transactions without a central bank in place, or I can use a different denomination of currency. And I think that the conversation has changed drastically in the last 2 years as regulations start settling in, and you have big institutions coming in. And I think Larry Fink didn't wake up one morning and said, oh, I want to launch a Bitcoin ETF. He probably looked at how much money Tether was making, and he's like, I want a piece of this pie. So I think in that sense, we are victims of our own success in this industry, in my opinion. But let's change the gears a little bit. We have still some time, and hopefully we'll take some questions. By the way, we're not giving any investment advice. So whenever you hear somebody, like Anton just said, Bitcoin might grow, just don't believe him, you never know. And he said he was in cash, so that's also a good reminder. Yes, I will remember that.
That's also not a device.
Exactly, no investment advice, yeah. But we can do a quick Q&A at the end and ask people what they think about Bitcoin price in next month. So let's see. Christmas is always a good time, yeah. So we talked about liquidity, and it's very difficult to detect how much of that liquidity is organic and how much of that liquidity is fabricated. So when you launch a token, there are market makers, there are liquidity providers, etc. So how do you guys sort between BS and actual liquidity?
Yeah, I mean, when it's only market maker driven, then it's quite clear that this is not a good game, right?
Yeah, yeah. VCs are market makers, but yeah.
Exchanges, so the next one, right? So I think VCs and other investors have, for the wrong reasons, suffered getting a really bad name in sort of the last 18 to 24 months, because it was always said like, oh, TGE was like this and then going that, right? Yeah. And everyone is saying, oh, VC stumping, and yes, there are certainly some projects that would fall into that category, but actually the majority of these is just some exchanges that are rather well known, right? So you can guess. They've been widely discussed on X recently, right? That are the only ones who have access to the token for at least 3 months after TGE. So it's quite clear who is actually selling. And that is also sort of a problem. So I'm very much in favor of shifting gears more to decentralized exchanges, having fair launches also at decentralized exchanges, and really cutting out some of the bad practices that we've seen in the bigger players. They're also with the bigger players, they're also good ones, you know, so don't want to say all decentralized exchanges are bad, but there's one very notorious one which we've had just recently also seen firsthand what it means to have a launch on there.
Yeah, and they can do it in volumes, Anton, anything you want to add to this?
It's very specific for us, obviously, since we take a rather active management stance. For us, liquidity is key. So if liquidity and spreads are not, very tight, then we need to delist tokens from our, let's say, whitelist anyways, because it would not make sense trading in and out or buying in and out when we need to move.
Yeah. Maximilian, anything to add? All right.
Maybe, I mean, if you look on the fundamental data of decentralized versus centralized exchanges, that's quite impressive. I mean, it's quite clear that decentralized exchanges are really taking the largest part. But I think centralized exchanges will still be there because it's just usable and easy.
You have customer service.
Yes.
I think it's convenience, but right now it's still convenience. But you've seen the share of DEXs grow. I think it's up 2x since FTX, so from 10% to 20%. Why is this so? Well, not because we have now grown very cautious of decentralization, but because the tech has evolved and UI on the X has become better. And that's the reason why people are now going more on DEXs, right? We tend to forget that shit happens, right? This is unfortunately how we people behave, right? So we need to be constantly reminded of that. But I think at some point, DEXs will be the standard.
Yeah. I mean, in crypto, we all suffer from short-term memory loss. Just 2 years ago, we were crying.
Not only crypto.
Yeah, well, could be. And I think this is also quite interesting because we talked about this earlier today. Sometimes it's easy to blame the VCs because they are hyping up new technology trends. Look at AI. You know, most of these AI companies are not profitable. They claim that they have certain growth levels, etc. But the capital it's almost like a VC subsidy, that you're growing with VC money, which doesn't make you pay attention to your unit economics, how you grow, is it healthy financially, etc. But then you have your crypto cycles on its own, which is exponentially quadrupling the impact of VC money coming into crypto. And we have seen this with FTX. Most of those guys, large VCs, Sequoias, etc., they wrote those checks because somebody else was investing in it, and they thought it was a good idea at the time, where you had zero checks and balances. But I mean, fast forward today, I'm looking at stablecoins in the same fashion that we just had Luna crash 2 years ago, and all we are right now discussing, the new APYs are a factor of 2x or 1x smaller than Luna, so it should be safe. Or your TVL is sold at billions of dollars, you should be safe. I think we are repeating the same mistakes to a certain extent, just because we think regulations are there. Yeah.
But we have been repeating this for as long as there is a capital market. I mean, bubbles are there to push innovation forward. We would not have railroads if it weren't for essentially a bubble back in the whatever that was, 1800s. We would not have the internet if there wasn't the bubble in the beginnings of the 2000s. So this is just the way it works. There is hype, it attracts capital, capital creates solutions. A lot of that capital is burned along the way. Yeah. And then from the ashes arise better products, better tech. This is just how it goes. And it will be probably, we just talked about this earlier, similar for stablecoins as well. I'm pretty sure that a lot of banks and other institutions will burn a lot of money launching their own stablecoin just to wake up that in the end they have not been able to execute.
Yeah. So how is this stablecoin summer or stablecoin flows are impacting your deal flow and investment thesis? Because I looked at some of these algorithmic ones. They have amazing APYs on them. It makes sense to invest in them. You put your money there and just wait for it to mature. So how is that impacting you in terms of your decision making, working with your founders, exposing different assets to that stablecoin class? How is that working?
We are very careful. because we think that this is certainly the next bubble to burst. I think Balancer was a very good reminder of, what can happen in this space again, even if you've been around for a long, long time, right? Just after that, Stream Finance also was sort of hacked. So it's been already a very eventful week for it just being Thursday. I think that we always say, like, if you see a high yield, you should always question yourself, where does that come from? And that's really an important one. So we know of some funds that are playing the stablecoin game because they say, like, look, we can at least month per month show to our investors that we're returning a little bit of cash, right? But as I said, we're very cautious, we're very hands-off on that one, because we say, like, if you can't 100% say where the yield comes from,
if you don't understand the model, hands-off.
Yeah. But so when you look at tokenomics and stable coins, the question I want to ask Anton is, where does the value reside? We looked at Circle. This company went public, and there are a few others. Maybe Ripple will go public because they just raised a new round. You never know. But as an investor, where does the value start building? Is it the equity side or is it the token side? Because stablecoins are a little bit of a different beast. Because if you look at Ripple, would you rather own Ripple token or would you be a shareholder in Ripple? How does that work?
Yeah, I think this is probably one of the topics to be solved. So if I look at it from an institutional investor perspective, and I can decide whether I want to be in illiquid equity or liquid tokens, from a fiduciary duty, I would always choose liquidity, because this gives me better means for risk management. But with equity, we have the legal certainty, what rights are attached to this. With tokens, we don't yet really know, right? And there is a lot of different versions how you can structure a token, but in the end, it all comes down to when the business model that you are running is creating value, is this value flowing into the token? And if it doesn't, the token is not worth a lot. Now you could say, well, if there is no dividend, cash out, whatever, just if there is a governance, right, then I theoretically, as a token holder, would have the governance power to push for a yield, a participation dividend, whatever you want to call it, down the line. But obviously, a governance right is only then executable if there is a certain distribution of the token holders, right? Because, well, if there's one majority holder, then you can just block everything. And so this is really the fundamental question to be asked. If I invest in the token, is there a value accrual mechanism to it? And I mean, I just read, I think yesterday, Ripple wants to raise on a $40 billion valuation. Yeah. If you ask people in crypto, most of them have a very critical stance towards the XRP token. I would argue rightfully so, because this is a prime example of where the real value actually accrues, and it's not in the token, in my mind.
I think that there could be a future standard for a certain segment that you will have as, a hybrid investment approach. But I mean, it's crystal ball. I cannot say where, but what we see is that token-only investments have become really difficult. Mm-hmm. And there are also large VCs that actually cannot do it because they are not allowed to.
For their LPs, LPA might be different, but I think, to your point, we have seen more token projects raising funding a few years ago. Now it's a hybrid situation where they are going with a SAFE agreement and a SAFT agreement, which gives you the rights for future token if they ever launch a token. But it's always confusing. Astrid, I think you want to say something.
Yeah, no, I think for every cycle, whenever there's tough times, this discussion comes up again. So it's actually not a new one, Yeah. So if times are good and you take token only, suddenly when times are tough, then it comes again, maybe we want to take equity again, and token is, whatever, right? So it's been a discussion for the last, 12, 13 years at least. However, I think that, again, on the positive note to regulation, it is that traditionally what you had was that you have the foundation companies that will launch the network, also for legal reasons, right? And then you have the token in the network. And normally it was that basically through the foundation and through the funds that you have in the foundation, there would be several set of companies that would be employed, that would do some kind of functional, developments on a protocol. Now you have actually the case that even the founding teams build their own development companies to specifically, obviously, develop and further support their own protocols. And this is where actually it is really interesting to get access to that equity as well, because these are companies in their own right that are profitable, that make cool tech, and sometimes even beyond what the protocol would be actually doing. So it is certainly on our agenda as well for the future, that we push more for also getting access to the equity of the development companies next to sort of a token, if the token instrument makes sense. Yeah.
Got you. Maximilian, do you guys invest in tokens alone, or do you do both, or hybrid?
No. So far, it's been only equity. We like to know what we get when we pay for something, and we also like to contribute to the startups. And this typically happens through board seats and information rights and certain other rights. So. And I do struggle to understand if equity is so illiquid, why the token would be then so much more liquid. But this is probably a lengthier story. Yeah. If there's no value in, or if there's a lot of value in the token, why would there not be any value in the equity? So yeah. we like equity.
Yeah, yeah. But if you had an investment that ended up launching a token, would you say, oh, we don't need a token on top of the equity, or how would that work for you?
No, we would definitely look at it, but and then I just learned that it's really hard to gauge the value of the token and whether the business model itself is contributing to the value of the token. This is something that we would look at. Why not?
Yeah. Anton?
And maybe just as a thought experiment, if we go down the tokenization route, right, and startup equity would be tokenized, we would have this equity on blockchains, and it would be liquid. And then what would be the difference to the token protocols that we have today? One is still centrally run by a traditional form of a company. The other would be a decentralized network. It's a different form of an organization. There would be people contributing, not knowing each other, not being directed by an MD or so, but through the protocol, through code. So it all boils down to, in the end, that is a different form of organization, which is then again decentralization, right?
Yeah. I think it out and
yeah.
I think this is a point where we every now and then see that the understanding of it is so hard, yeah, because, for example, you have like you mentioned, you have an operational entity where you can give equity. I mean, you can tokenize that also, of course. And then you have a foundation where you give a token, and if you build, for example, a large ecosystem of different operating companies, that really gives a completely different angle. And I think this will be the future. We will see more and more companies and projects that are building ecosystems with many different operational entities, and actually then you can think about if the foundation and the token is so strong and the narrative and the model that you believe in different of these new operational entities. And I think that makes it quite interesting, but also complex, of course. Yeah.
Just to respond to Anton, that's very interesting, and I think an equity token is something else than a utility token. I was always thinking now about utility tokens or something the like. Yeah. An equity token is something else, right? Because it comes so close to equity. But I would be very critical in one of our companies just launching an equity token now, with us being invested in the equity only, because you basically IPO. Right? And you very much influence the pricing of my equity through a token on a marketplace that might be liquid, but might also be not liquid in the future.
Isn't that every VC's dream, that you want to see your value of your portfolio daily, just like in a stock market, without being public?
Yes, but on a truly liquid market. And so this is I think the question behind it. Like, where do you actually go public with your tokens? Yeah. And how close is that to the real value of the company?
Yeah. Let's see how this one goes next year. Interesting. So we have 7 minutes. We're going to take a few questions from the floor, but before that, let's do a quick fire round. So I'm just going to ask very quick questions, short answers, speak your mind. Again, no investment advice. Let's just see how this goes. So first question, we might have some regulators in the room, I don't know, but in your opinion, is Europe winning or losing the regulatory game right now? Yes,
no, it's not. We're not losing, but we need to work on a few points.
Okay, Astrid?
Similar, but we also need a euro stablecoin.
All right, Anton?
We were in the lead, but we were overtaken, or are in the process of being overtaken.
By Trump? No?
I think by a lot of regions.
Yeah, okay.
Not just the US.
I think we need to find our own way and keep or increase sovereignty with regulation.
Okay, I say it's optimistic, like not negative. Let's see.
Need to be.
Okay, when somebody sends you a project with tokenomics, etc., what's the first red flag that jumps at you?
When there's no traction at all, when there's no community, but big idea about getting millions in via the token.
Okay, Astrid?
No real credible business model for the token.
Okay.
Same.
In addition, no understanding of compliance and regulation.
Okay, all right. Two more and then we are done. What is the risk that you see right now that the market is underpricing completely? They're missing it. Everybody in the market, what is a component that is completely underestimated? I mean, we touched upon a few things like stablecoins and stuff, but...
Can I turn it around? I think the opportunity that a lot of people are not seeing is the limited access.
Yeah.
We have seen select assets performing very well, be it Bitcoin, be it now in also last month Ethereum. Obviously, crypto stocks, Coinbase, Robinhood, etc. They all have one thing in common: that's access. Access to traditional markets. The remainder of the crypto ecosystem doesn't have that, but this is something that will be closed, this access gap. And this is a big chance that a lot of people are not seeing.
I like the positive approach. So any opportunities that we are missing? Oliver, Astrid?
Yeah, we see quite, and I mentioned that before, quite really interesting, really powerful and potential business models, especially in the infrastructure deep in space, that are highly underestimated. And they really struggle in getting funded.
Okay.
I think one of the risks are the DATs. On the one hand, we don't know yet how they will participate or if they will participate in governance of the systems where they accumulate tokens for, because in theory they have governance power, right, with proof of stake networks. And also we don't know yet about their pattern of selling off fast. So I would always urge people, if you're really interested in a token, just buy it. It's easy on any exchange. So don't go for DATs, please. You also pay fees on that.
Okay.
We're very curious about what will be built on top of stablecoins. So stablecoins is an infrastructure. There will be a standard set, hopefully, in the next year or two. And we actually are very curious on application layer and startups building on top of this infrastructure.
All right, cool. My last question for the day. Are we entering a crypto winter market or not? I don't know. Because there are some patterns right now going on, but just curious about how you see it.
Well, we have already, since last sort of crypto summer, said that the patterns are actually changing. So we've seen also through last year, we've also published that in a blog article, that the whole narrative was mainly driven by Bitcoin and ETH, even though ETH had a little bit of a stablecoin-like sort of identity at some point. And what you will see is more the kind of sectors that will actually go up. So with usage, you will see that these sectors will actually become hyped. So I don't think there is something where we see everything going 100x anymore. I think those times are over. Also, I think the geopolitical situation these days doesn't really allow for any scenario that would make that possible. Post-COVID was a very different time, so people should also always try to remember what sort of the last two sort of bull markets had sort of from an economic standpoint that made these happen. So I think we're a little bit far away from that. But I think, for example, what I found was very positive when you thought about the AI hype, right? And when NVIDIA came and OpenAI came and all that, that you could see that actually AI coins were performing really well. And I think this is a pattern that we will see more and more in the future.
And I think very important to understand is what's actually the crypto winter. And if you look at it, what happened in 22 and 3 and after, actually it was a winter in the speculative space. Because if you look at the fundamental data, the usage data and developers and so on, there was no winter, yeah? And I think this is something that we need to understand. So we are actually all mostly talking about the speculative space and not the whole. It's not the whole picture. Right. But I don't think I agree to you. We will see a differentiated picture.
And we need to get rid of many useless meme coins.
Yeah.
Meme coins, okay.
I'd say structurally very positive outlook, regulatory clarity in the US, a lot of ETFs coming to market, institutions embracing the asset class, adopting the technology, which means more demand for the underlying assets. This is all good, but the market is very dynamic. It's also dependent on macroeconomic factors. So this might change, right? In the interim. So we personally as a company, we just follow the data. And what holds true today might not hold true tomorrow, right?
All right. Maximilian, any thoughts on winter or not?
A good crypto startup is like Austrians.
Okay.
We strive in winter sports.
Wow, nice. Very nice way to finish it, yes. Well said, well said. So James, I think we can take 1 or 2 questions if you may.